And welcome back to Lunch Money. It's time for your options update now. I'm Dominic Chu. Here are some of the top headlines. The derivatives team over at BNP Paribas says U.S. growth is likely to remain weak, and they're looking to the cheaper and more consistent growth of large cap stocks. To play this, they recommend buying S&P 500 calls and selling Russell 2000 calls, both with December 2013 expirations. And Indian stock put options, or bearish bets, are the most expensive on record compared to calls, which are bullish bets on those Indian stocks. Options traders are protecting against declines as inflation increases and concerns the country will lose its investment-grade credit rating. And our top option story, we're looking at how to play those bank downgrades in the options market. Moody's downgraded a slew of banks last night, but bank stocks, they're in the green today. So let's get an options trader's take on how to play this market here. We're here with Alex Bernal at Keen on the Markets. And so, Alex, let's talk about the green on the board for these financials. How exactly are you viewing what's going on right now?
Well, I mean, the XLF as a whole is kind of a disaster chart. If you take a look at it from like a 6-month time frame, it's been severely underperforming the S&P, but that's not to say you can't make money.
Now, overall, though, how are the downgrades playing out in the options market? Are you seeing any kind of unusual activity today?
You know what? I was actually looking at 3 different names, Morgan Stanley, Bank of America, and JP Morgan. The first one, Morgan Stanley, the options action was a little bit complex, but the way that the flow is really going across the tape, it really looks like there might be a very large short stock position. That's based upon, the different amount of calls flowing in and out. Again, so, I mean, I don't know if it's against a short stock or if it's just, call buying, but that's basically what the flow is telling me for Morgan Stanley. For Bank of America, it's actually a little bit different. There was actually huge call sellers at a little bit higher than where it's currently trading. So, again, that looks like a huge institution or a bunch of big blocks of stock that might be writing calls against it to hedge against the current volatility. The last one I want to talk about is JP Morgan. And so I was kind of looking for a play to the upside, and lo and behold, this morning there was some huge call buying that went across the tape. About 20,000 call contracts traded at about the 35 and the 33 strike. So, I mean, to me, that's the only financial that's really got big money coming in with big bets, saying that there's a little bit juice left of the upside.
Alex, it's Adam here at headquarters. Good having your perspective today. What are you doing?
So basically, I want to do a put spread trade for JP Morgan. I'm going to sell the 35-32 put spread for about 65 cents. I'm risking about 235 per one lot, and basically I want to capitalize on the heightened volatility, and with this trade I actually make money if the stock goes up, sideways, or down less than 7%. So I mean, I'm putting the odds in my favor for this one.
Now, Alex, it's Dominic again here. What are you looking at for the rest of the afternoon session here as we approach the close today? You expect any volatility heading into this weekend with these financial stocks?
You know what? With the huge bear bar yesterday, that's a technical, I guess, terminology, I would expect that people would be taking risk off the table going into the end of the day. I don't expect a huge sell-off, but, I do, see that we might get some selling volume going in the end of the day, for sure.
All right, Alex, so let's recap this for the strategy today on these options here. He's looking at Alex Bernal at Keen on the Market, looking at put spreads, selling those put spreads on JP Morgan, specifically the $35, $32 put spreads for next month's expiry. You can sell those. Again, sell the $35 put option on JP Morgan, buy the $32 put option. You'll make 65 cents per contract, and you'll cap your loss off any shares below $32 per share on JP Morgan. So that's our options update, Stephanie. What's ahead for you on Lunch Money?
When we come back, it's our Lunch Money.